Hi and welcome to Random Rogers Big Picture for the week of June 1st. Busy week up here on the mountain this week. Very busy, but all good stuff. Wanted to talk a little bit about kind of this farming stock thing that I mentioned on Friday, and that will morph into another talking point, and hopefully it'll be useful. How about that? So this farming stock that I found is New Zealand based. They essentially export their expertise in dairy farming to Uruguay. They own a bunch of farms there and a bunch of cows, produce milk. They're looking to increase their footprint. No real way other than reading the company website. No real way to find anything out about the company, at least not yet. But maybe there will be a look at the New Zealand Stock Exchange website. There might be links there that go out to some stuff. But so this kind of got me on a jag about finding other farming stocks. And so I spent just a little bit of time. I was able to get some help from the Schwab Global Desk. I got a couple of more names in the UK. I'm sorry, I misspoke. In New Zealand. And I got a bunch of names in a place I just not 2 or 3 days ago kind of poo-pooed as being kind of a rough place to invest, but I think I need to do some more learning here, and that's Indonesia. He gave me, there's a guy named Steve, gave me 7 or 8 symbols, and they do interesting things. A combination of everything that comes from that part of the world. These companies farm palm oil, coffee, things like that. Interesting. Is it an investment? I have no idea, but it's interesting enough that I want to learn about them. That also means learning about the country. I mentioned that Indonesia is now out of OPEC, or has signed paperwork to be out of OPEC. I didn't bother looking to see when that is effective, if it's immediate or not. Does that matter that they're out of OPEC? Because they've been a net importer of oil for a while. So I don't know if it matters, but that's something else maybe to study and see what's what. I'm thinking that there must be farming companies elsewhere in the world, other parts of Latin America, other parts of Asia. I got to think in Thailand and Malaysia, there's got to be a couple of publicly traded farming stocks. One idea that the guy I spoke to gave me that I always say to people, I can't believe I forgot it while I was on the phone with the guy, is go to the website of that country stock exchange. That's a good place to find companies. Duh. Totally spaced that, but he reminded me of it, and excellent. So I'm going to try to spend some time this weekend. If I do have the time to do it soon, like tomorrow, actually no, I'm recording this Friday afternoon, so I have the time on Saturday to research this, I will, and I'll look for and try to post on Sunday some of what I find, and let you guys see what you can come up with. I mean, hopefully this can be a collaborative effort. It's clearly a theme. It either makes sense or it doesn't. I have no idea. I hadn't thought about it till just a few hours ago, basically. So this is the kind of the exploration process. Now, another thing that I think ties in with this, with exploring new themes, waiting out on old themes, and this maybe ties in with what I wrote about New Zealand on Friday morning. I mentioned that I've been out of New Zealand across the board since it's like 2.5 years. So I think it was February of 2006. And I also noted that I'm sure at some point I will get back in. I don't know when that will be. I don't know what that vehicle would be, but at some point I imagine I'll be back in. It's an interesting destination. But I've been out for 2.5 years, and I'm willing to wait as long as I think it makes sense. No guarantee I'm going to be right about getting back in. There's no guarantee, I don't know. You could look at when I got out, and in a way it was right, and in a way it was wrong. No great shakes. I just felt like it made sense to be out. The vehicle I was using, I certainly felt it was time to be out of that. That was what I meant by sort of being right, but the market rallied on a little bit more after I sold, but the stock I sold did not, if that makes sense. But, let's kind of ferret out together. If something is investable, at times a theme may go back and forth between being investable and not being investable. Out of New Zealand now, probably get back in at some point. This applies to other things. I've been very hesitant about going into U.S. fixed income products for new clients or clients that add money from the standpoint of, what am I going to lock someone in to 4% for 10 years or 3.33% for 5 years? That just doesn't make sense to me. I'd rather, wait for a couple of years, if that is how long it takes. At some point, interest rates will normalize, and when they do, take advantage. There was a kind of a blip a couple of years ago where 2-year paper went up above 5%. I've talked about this before, and I was in a similar situation where I was not really adding much because rates were low, and then there was a run up close to 5, and then above 5, 5.25. I don't remember exactly where they topped out, but it was above 5.25. And so I added quite a bit there, and over the last couple of months, some of that has started to mature, and then there's still some more waiting to mature. There's no real hurry with anything. People often, if it's a big macro theme like infrastructure, I mined, I'll use that word, I mined that little bit of data about, $1 trillion needing to be spent globally every year through 2015. Well, if that's the case, then you don't need to jump in right this moment. I'm just using that as an example. I've had exposure for a while, and I don't necessarily feel that now is a bad time to add exposure, but just using that as an example. So patience with fixed income. As an example, currency. The dollar is weak. I haven't really added much in the way of currency exposure. There was a tiny little two-minute dip in the Aussie, and I added that for 1 or 2 people, I think, that were new or had added money, whatever. But there's nothing wrong with being patient. People, if you watch certain things on television or if you read certain things, if it's a trade, and that's not what I'm talking about here as a trade, but more as a long-term investment, you don't need to jump into something all at once. Hopefully the manner in which I write kind of conveys the fact that, you think about stuff before it happens, so that when it does happen, you're ready to act. There's no rash decision. Buying in a rash fashion is the same as selling in a rash fashion. It might work out, it might not. There's no way to know, but if you consistently just respond and act rashly, everyone's going to do that every once in a while, not the point, but if that's a continual pattern, then that stands to be counterproductive. And so with some of these things, just wait, let the market come to you, or, something's gone up like this, as a lot of things have, and it doesn't have to go down like that in order to be investable again. Maybe the angle changes, it just flattens out a little bit and does nothing for a while. Nothing wrong with buying into that sort of a consolidation for a theme you think is important. If something's, I'm going to suggest, if something's gone up 100% in a year, then over the next 6 months it goes up 5%, even though you're paying 5% more at that time, you're probably buying with less risk. It's just a vague general rule of thumb, but that has worked out, that does stand up over time. So I guess this is a short video. Patience. And I will work on this farming stuff and try and come up with a list. If you're watching the video, please leave a comment of any you know that will make the post on, whether it's Sunday or Monday, that will make the post more useful if you know of a name and you can leave it. That's about it. Have a great weekend.